BlackRock's terrible.
Right.
They're one of the worst players on Wall Street. They're completely without morals whatsoever. Their business model is just repackaging stocks and selling them as ETFs.
We have been part of a huge revolution in investing through ETFs.
They own more, their ETFs own more stocks than there are stocks. And they charge a fee for that. They are really a plague on capitalism.
It just identifies how much money laundering there is being done in the world.
It's easy to see where this is going, and so it doesn't seem like a stretch. 2.2 million is in play.
Today we have a major update from one of the most respected voices in the Bitcoin space, Max Keiser, sharing his thoughts on Bitcoin, the crypto market, and why BlackRock's Bitcoin ETF may not be what many assume. He believes BlackRock will play a far bigger role in 2026 than any other institutional investor. And while he still holds a strongly bullish outlook for Bitcoin, he explains why this moment in history is completely different from anything we've seen before. According to Kaiser, investors are not prepared for what's coming. He claims Bitcoin will finally prove itself as a true form of money, free from inflation, government influence, and continuous money printing. Let's dive in and hear what he has to say.
The total addressable market is 400 trillion. The total address of all the fiat money world, it's literally a Ponzi scheme, and you can't taper a Ponzi scheme, and it's starting to unwind. Now, there's I believe, an effort that they believe in Washington and elsewhere, they're going to keep this Ponzi scheme going. I think we're at the end game. I think they're at the end game for both the central bank model and the nation state model. After 300 years, I think this is all coming apart. And Bitcoin will emerge as the global reserve standard. And so that means, and everything goes to zero against Bitcoin. So, I think Michael Saylor has a $13 million per Bitcoin prediction out there. And I can see how you can get there, because you're talking about squeezing 400 trillion into 21 million units of Bitcoin, right? The price discovery tells you where the price is going, and they can't make any more of it. So it's not hard to come up with these numbers. And, there's a lot of Bitcoin trapped. We saw recently something like 70 or 80,000 Bitcoin over there at Galaxy was transacted. They suddenly, wallets that people thought were lost are not lost. They're actually back in play. And a lot of these banks are going to offer the ability to put Bitcoin on deposit and use as collateral for your traditional finance account, which is tied into a credit card. So now, okay, let's say you've got 5-10 million in Bitcoin. It's in a wallet. You haven't touched it in years. You activate it. You stick it in your Schwab account. It's now marginable, and you're trading Bitcoin treasury companies, and you just use your Amex card, which is debitable on your Schwab account. You just engaged in a Bitcoin transaction, essentially, because that transaction was collateralized by your Bitcoin. So Bitcoin as a pristine asset will make its way into the banks, and a lot of Bitcoin is out there. It's a $2 trillion asset, but it's not an asset that's fully monetized yet. The Bitcoin itself is still in the shadows, and that's coming out of the shadows because the rails to the retail banking are opening up. But like I said before, you're not separating money from state, you're reuniting money and state. So there's an issue with that as far as the use case for Bitcoin and what it ultimately means. And that's the message I would like not to get lost, is that ultimately we would be better off if we all were self-sovereign. But, that's still a message that is being delivered, and a lot of people are hearing it.
Do you think retail kind of tends to go for those seeming higher alpha plays? I mean, that's why we see people invest money in all these quote unquote shit coins and stuff as well. Or do you think mainly people just don't want to custody it because it is still a bit of an intimidating thing to a lot of people?
No, people are just buying numbers on a screen. So, and they like those numbers and they see the number go up and they buy the ETF and they have no conviction. So in a bull market, they'll buy it, and in a bear market, they'll dump it. So they're not conviction buyers. They're just adding liquidity to this big market. And meanwhile, the ETFs are buying a lot of Bitcoin. And I think one of them now has like for like redemption of Bitcoin. So you can actually redeem your ETF for actual
only institutional.
Okay, institutional main chain Bitcoin. So that's like a kind of a step in the right direction. But the idea of self hodling for these retail buyers and ETFs never crosses their mind.
I think it's important also to note that BlackRock is a good one to look at. Is they have the Bitcoin ETF and the Ethereum ETF, and that you could see that the story of Bitcoin is easy. It's a powerful story. There's no story for Ethereum. What is it? Right. Why? Like, there's no story for any of the other currencies, the coins out there. BlackRock actually just recently said they're not going to offer a Solana or one of the other coins. I don't know. But they're not going to be, or XRP. They're not going to be offering, ETFs for any of those. They're going to they're sticking with the Bitcoin one, especially. But you could see the volume there. You could see how the work of removing how ETFs removed the unit bias that you mentioned, because there was a unit bias before, and you saw that back in 2020, 2021, when the last time Bitcoin went up, is the altcoins. They went into the altcoins, and the ones even smaller, the ones $10 or $20, I could afford that. So you saw that in the last round, but the ETFs just destroy the unit bias, because you just know it's like $50, whatever, like it's a $50 a unit there. And without that unit bias, so off the exchanges, like it used to be the exchanges, every single cycle before now was on the exchanges where the whole unit cost price existed. But on Wall Street, where there's no unit price like that, Bitcoin just trounces the other coins in terms of the ETFs. So that's because it's the only one that has a story that makes sense. That is money. That is digital gold. That is digital treasury. Basically, it's money. It's sound money. It's a layer one money. However you want to put it. It's got a story that is easy for people to understand. And
Bitcoin is bouncing back after a rough few weeks. Many investors are buying again, including big holders who had sold off earlier this year. That return of confidence helped drive the rebound. The rally comes as stock markets, especially tech, have also recovered, giving crypto broader support. Some traders are hopeful for a Santa rally going into the end of the year. Still, not everyone's sure. Some analysts warn the recovery might be fragile, and Bitcoin could fall again if sentiment turns or economic conditions shift. In short, Bitcoin is rising now, optimism is creeping back, but things remain uncertain, so it's a time to stay alert. Wish someone taught you Bitcoin earlier? Now's your chance to do better for your kids or young family. This teen ebook is perfect. Link in the description.